Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The French Prime Minister warns of a moment of truth with the government on the verge of collapse. The euro and French bonds sell off. Fed Governor Christoph says he's leaning towards a US rate cut this month, with other officials making clear they expect more cuts next year. Plus, a court again rejects Elon Musk's bumper pay package as Tesla CEO. But over at SpaceX, a tender offer sees the startup's value rocket to about $350 billion. Happy Tuesday. So despite the apparent imminent collapse of the French government, European futures are actually pointing to gains after modest upside that came through for European stocks yesterday. European futures pointing to gains of 0.5%, and the focus certainly will be on how things unfold in the days ahead in Paris for, of course, the fate of that government. FTSE 100 futures in the UK looking to add 0.2%. S&P futures after fresh gains yesterday, a 54th record for the S&P stateside on Monday, currently looking to add just 0.1%. Nasdaq 100 futures, they gained in terms of the upside that came through for the Nasdaq 100, a little over 1% by the end of the close, looking to add about 0.1%, 17 points so far in the session. Let's flip the board and look cross-asset with a focus very much on the euro. Before we get to the single currency, the benchmark US 10-year on the back of the comments from the Fed's Williams and Waller suggesting that, yes, more work needs to be done to get to the neutral rate, though neither fully committing to December, to later this month, although Waller suggested he's in the ballpark unless the data changes. And we have jobs data throughout this week, of course. The US 10-year currently yielding 4.20, yields up close to 2 basis points. Euro dollar at 104, dropping about 1% yesterday, getting closer to that parity level, back below 105 on the single currency, just down 0.1%. We continue to monitor that, of course, and the sensitivity to the single currency around the politics of France. Brent, $72 a barrel, and gold currently it's 2,642, just up 0.1%, stabilising. OPEC Plus as well on the oil store, of course, meeting tomorrow. Let's get to what's happening in France then. The French Prime Minister says the government is close to collapsing, with far-right leader Marine Le Pen pledging to join a left-wing coalition to topple the administration. It comes after Barnier invoked a constitutional mechanism to adopt a social security bill without a vote.
This bill is now here. Now is the time to act to implement it. I believe we've now reached a moment of truth which confronts everyone with their responsibilities. It's now up to you, members of the Parliament of the nation, to decide whether our country adopts responsible financial texts, essential and useful to our fellow citizens.
Okay. Let's bring in Bloomberg's Caroline Connor, who joins us from Paris with the latest. Caroline, is the Barnier government then living its last few hours? Is collapse now imminent for this French government?
It does seem so, Tom, that the collapse of this Barnier government is almost inevitable if the National Rally joins forces with the left-wing alliance, because they will have a majority to support this vote of no confidence, which should happen by Wednesday night or Thursday morning. So Michel Barnier might be the shortest-lived prime minister of the French Fifth Republic since World War II, really. And it doesn't seem like there is any way out unless he does manage to get about 2/3 of the socialists to abstain from this vote of no confidence. But at the moment, the socialists have said that they will also support it. So it does seem that the collapse is inevitable. Until the last minute, Michel Barnier tried to respond to the request of Marine Le Pen in the middle of the afternoon on Monday. In fact, the markets rebounded when Michel Barnier announced that he was giving up on reducing drug reimbursement, which was one of the key demands by Marine Le Pen. But even that, she said that wasn't enough. At the last minute, she wanted to add an amendment on raising all pensions from January. And according to the budget ministry, this amendment came too late, couldn't be included in the bill. So Michel Barnier had no choice but to provoke himself this vote of no confidence. It's actually ironic because at the moment, Emmanuel Macron is in Riyadh on a trip to Saudi Arabia with some ministers, and those ministers might actually come back tomorrow without a job.
Yeah, it's quite a moment, isn't it? You talk about the short-lived tenure then of Michel Barnier, potentially, if this government is toppled. And that kind of has flashbacks for us in the UK around Liz Truss and the short-lived premiership here in the UK. So what happens next then, Caroline, if this government is toppled this week?
So what happens next? Then Emmanuel Macron, the president, will have to name a new prime minister. He could actually rename Michel Barnier, who will de facto remain as a caretaker until a new prime minister is named. And that could take a while. Remember, after the snap elections in July, because there is no majority in parliament, it took 2 months for Emmanuel Macron to choose a prime minister. Now, whether Emmanuel Macron will actually turn to the center-left this time, like we were expecting last time, that remains to be seen. Whether this alliance of the left could still break up with part of the center-left joining forces with the right wing, but that seems like a long way out. So some MPs from the left are actually calling for Macron to resign. Well, this would obviously be a bad scenario for the markets, but it is clearly a scenario that is not totally off the table at the moment. Some opposition parties are also saying that Marine Le Pen is not very acting rationally since her trial. You know, she is on trial for alleged embezzlement of EU public funds. The verdict is expected on March 31st, but she risks being banned from running for office for 5 years, which would make her miss the 2027 presidential election. So according to our own Bloomberg economics analysts, they actually say that Le Pen, at this moment, might prefer political chaos to stability.
OK, so Marine Le Pen's own court challenges are possibly a factor in decision-making going forward. Bloomberg Caroline Conan with the latest out of France. Thank you. Let's stay on the market reaction to this story, of course. The euro and French bonds coming under renewed pressure, of course, selling pressure as the French government faces that collapse. Bloomberg's own Live's strategist Mark Cranfield joins me now for the analysis. Mark, French bonds, of course, have been selling off. We've seen that spread widen versus their German counterparts. How much is priced in at this point?
Probably not enough for the uncharted territory which Michel Barnier was speaking about. So the Prime Minister himself said that what investors are watching here is the risk that if we have a no-confidence vote and the government fails, France really goes into a bit of a tailspin here. It's a territory where it's very difficult to price the risks involved in various French assets, particularly for bonds and the credit derivative curve as well. We've seen a spike in French CDS costs. That means the cost of insuring French government debt is the most expensive it's been for about 4 years. People willing to pay a lot more to protect against the risk that something goes wrong in France. So all of those things are coming together, but it's probably more so than the euro itself. The government bonds and the credit curve really are much more sensitive very specifically to the French government and the risks around that, and that's what investors are focusing on. So if we do get a situation where we're into this so-called uncharted territory, we could see a tremendous spike. We haven't even reached 100 basis points yet in terms of the spread between France and Germany, but people are also looking at the other spreads here against Spain, against Portugal, even against Greek as well. And they were closing in the gap with Italian yields as well, which is very significant. France and Italy on the same page. That's really something shocking to investors. So clearly not enough would be priced if the government falls apart this week.
OK, and it seems there's a very high likelihood of that happening, according at least to our reporting out of Paris. So we watch a potential further blowout in spreads. Meanwhile, stateside, Fed officials have been making some comments, Chris Waller, Williams as well, about keeping their options open, essentially, before the next policy meeting. Fed Governor Chris Waller says he's leaning towards a rate cut later this month, barring, of course, any negative surprise on the data front. Take a listen.
At present, I lean towards supporting a cut to the policy rate at our December meeting. But that decision will depend on whether data that we receive before then surprises to the upside and alters my forecast for the path of inflation.
Mark, what's your assessment of what we're hearing from Fed officials? We've got other speakers this week. Jay Powell, of course, on Wednesday. It seems like they are leaning towards further rate cuts. They haven't locked themselves in, of course, to the next meeting. But they do want to see rates getting back towards whatever the neutral rate is. And they think there's further work to go on that.
Yeah, and you can see that's where the bond yield curve is going in the US market. So we're getting an early taste of the so-called bond vigilantes here in the Treasury curve. So we're seeing it flatten substantially again. We're almost back into inversion. So for a big chunk of this year, we had the Treasury curve where the long-term yields were well below the short-term yields, and we're beginning to go that way again. And if the Fed does go ahead with a rate cut in December, you can fully expect that the Treasury curve will start next year with an inversion and will probably hold it for some time. Because what the thinking here is from investors is that the risks expected from the next Trump administration will be inflationary for the US economy. Still to be proven exactly what he does, but that's the thinking for now, is that whatever is enacted, it will stimulate the American economy, but at the risk of raising inflation. But the Fed's track record on trying to tame inflation is one of being reactive, not preemptive. We've seen it in this current cycle where they took a long time to start raising interest rates. They wanted to see CPI really on the upside and having some sustainability before they stepped in. And that's what investors are looking at again as a potential repeat for next year, is that the Fed will allow, if inflation does come back, they'll allow it to go away at first. And that will be reflected in the fact that the bond market will push short-term yields up, trying to edge the Fed to go back to raising interest rates while the long-term rates stay down. And that is quite possible going to be the scenario as we go into 2025.
OK, really interesting. Markets may be bracing for a Fed that is, again, behind the curve on any inflationary impulse out of this incoming Trump administration. 4.18 on the 2-year right now, 4.20 to your point on the US 10-year. Bloomberg MLive strategist Mark Cranfield, thank you. Let's take a closer look at what's happening in China right now. Some lines crossing just in the last hour or so that will be of significance to market watchers. Avril Hong in Singapore. Avril, what are you looking at?
Absolutely, Tom. That line crossing the terminal that you speak of is Bloomberg sources saying that the China Central Economic Work Conference is going to be happening over 2 days next week. And this is, of course, a high-profile, closed-door gathering of the top leaders, including Xi Jinping, in which they could discuss the GDP target, stimulus even. So, of course, what we've been seeing on this day that the news hit is China growth concerns. That's really affected the stocks and the currencies. And we actually saw earlier today offshore yuan hitting 731. Past that level, actually, the weakest against the greenback in a year amid those growth concerns surrounding China. The news seems to be helping the Chinese currency to pare some of those declines, but it's still really underperforming compared to the rest of the region. Take a look at this next page, and it'll show you how stocks in this part of the world are faring. We've been seeing actually the CSI 300 and the Hang Seng clocking declines earlier in the session, so it does look like this bit of information is helping a bit of a turnaround, but still that bit of underperformance versus the rest of Asia, still heaving that sigh of relief that US restrictions on chips and other key components to China not as bad as feared. So this is what we're seeing out of China and the rest of the region today, Tom.
Yeah, a bit of a turnaround on that news when it comes to Chinese markets and, of course, the upside over in Japan and beyond in the region around that chip story. Avril Hong in Singapore, thank you for the market check out of that region. Let's get to a major corporate story then and further details and challenges for Elon Musk. Tesla says it will appeal a judge's ruling that rejected CEO Elon Musk's record-setting pay package, saying the court's decision is wrong. A judge in Delaware once again ruled the company's board was too much under Musk's influence. I say the challenges, but of course he's very close to Trump and has benefited from that in terms of the upside that's come through for Tesla's stock. Let's bring in Bloomberg's Peter Vercoe right now for the details. Peter, why was it struck down again? Where does it leave Musk's pay? It's hardly paltry, is it?
No. So the judge who struck this pay deal down in January, Tesla then went back to its shareholders at its annual meeting in June and put it back to shareholders who voted in favour again, 72%, so quite overwhelmingly in favour that Trump should get this, Musk should get this pay package. Went back to the judge who delivered her ruling today for very similar reason that she struck it down in January. She said that the board really capitulated to Musk's terms. It didn't negotiate with him. It could have. There were other amounts that it could have offered him. Rather, it's just been, taken to shareholders as it's, this big package or it's nothing, and nothing in between. Tesla have said that they will appeal that decision. At the time that it was granted back in 2018, it was worth about $2.6 billion to Musk. When it was struck down in January, it was worth $56 billion. Given the rally that we've seen in Tesla shares since the election in November, it's now worth about $110 billion to him. So it's a fairly significant chunk of money in anyone's terms, even in Musk's terms. He's still far and away the world's richest person. His net worth is about $353 billion at the moment, according to the Bloomberg Billionaires Index. But again, it comes down to whether they can get this pay package through to him. They are going to appeal. If that appeal, if they lose that, then Tesla is going to have to put together a new package.
Yeah, it's not too stingy, is it? 353 billion in terms of net worth. And part of the makeup of that, obviously, is what's happening with SpaceX, and the value of that company just keeps being on a tear. What's the latest in terms of what's happening with SpaceX?
Yeah, it's a little bit of, what Musk loses on one hand, he picks up on the other. Bloomberg had a story this morning that SpaceX is going to conduct an insider share tender. So this is an opportunity for employees and early shareholders to sell stock back to the company. And that's going to be conducted at a valuation of about $350 billion US. Now, only last month we reported a valuation on SpaceX at around $255 billion, and at the beginning of this year, it was valued at around $210 billion in a separate insider tender. And now, Musk owns 42% of SpaceX, so you can do the math there. His valuation or his value of his SpaceX stake has risen about $40 billion just in the last month. That makes SpaceX the most valuable private startup in US history. And just to put that in perspective, it is worth more than Airbus and Boeing combined.
Wow. There we go. That is the perspective. Worth more than Boeing and Airbus combined. Bloomberg's Peter Vercoe with the details on Musk and SpaceX. Thank you very much indeed. Coming up, US President Joe Biden arrives in Angola in what will likely be his last overseas trip as president. We discuss the details of the visit. We'll be live on the ground. That's next. This is Bloomberg. Welcome back now. Joe Biden is in Angola for what may be his last overseas visit as US president. Bloomberg's Africa correspondent Jennifer Dabasaja is in Luanda on the ground for us. Jen, what are the tangible outcomes from Biden's visit?
Good morning, Tom. Listen, for Angola and I think for the U.S., the expectation is that we are going to hear and see more commitments, both public and privately, about some of the commitments, investment commitments made to Angola. And when we talk about this, the important thing to note is that Angola has, for the past few years and decades, really relied on their export revenue. About 90% of it comes from oil. So when we speak with a lot of government officials here, they're looking for the private investment that is going to help them diversify away from oil, in particular non-oil investment. And when you take a look at some of the particular areas, the sectors where they're focused on, a lot of it has to do with infrastructure. And so the key anchor for this trip is the Lobito Railway, this corridor that the U.S. has heavily invested in. But we also spoke with the transport minister yesterday, who told us that even their airport they're looking to privatize, and their state-owned airline. And when they talk about partners, they're not just confined to any one part of the world or any one sovereign. They're really looking for anyone who can help them in their push to diversify away from oil. Here's part of what he told us yesterday.
Irrespectively of being Chinese or US or European, as long as we can deploy the infrastructure and put it available for our communities and for our people, we are fine. The issue is we cannot jeopardize our fiscal sustainability and debt sustainability because we need to rush
Yeah, the significance is really a number of the investments that we have seen have been coming from China, especially here in Angola. Even the airport has been Chinese invested. And so that is why we posed the question to the transport minister to see what the U.S. then can bring potentially to their economic growth of the country. Excuse me.
Yeah, Jen, sorry for interrupting you there. That was my mistake. Listen, in terms of you touch on the significance then, and there's a significance clearly for the continent of Africa. What is the risk that this all gets unwound under a Trump presidency? Is that part of the conversation? Is that an anxiety for people on the ground there?
You know what? It can't not be, Tom. And we have heard people talk about, what does this mean now when we do see Joe Biden leave office in just under 50 or so days? And what does this mean for a Trump presidency? But what we've heard from a number of the officials, both private and public and private sector, who are key stakeholders, and in particular the Lobito Railway, which is going to be key to the EV transition, they say they don't expect to see a U.S. administration that would lose interest in investing in this part of the world, and especially because a number of the mineral deposits that we're going to need for the EV transition are focused here in this part of the world. And we're seeing heads of state gather to talk about that, right? And so it's unlikely that they're going to see a position change from the Angolan government when we do see a new Trump presidency coming in. But time will tell whether or not anything actually changes in terms of the bilateral relationship.
OK, Bloomberg's Africa correspondent Jennifer Zabasaja on the ground for us in Luanda, Angola, for that presidential visit. Thank you. Coming up, Intel CEO Pat Gelsinger is forced out. We bring you the details. Stay with us. This is Bloomberg. Intel's CEO is out. Let's bring in Robert Lee now from Bloomberg Intelligence for the details. Rob, what do we know?
OK, well, I guess this could, arguably mark the beginning of the end of this tumultuous period for Intel. But there's a lot of strategic challenges for the new CEO to get to grips with. First of all, the company's lost its technology leadership to TSMC from about 2014 or so. So they need to decide, are they going to stick with the foundry and the fabrication business, or are they going to outsource it to somebody else like AMD did several years ago? Secondly, what growth market are they going to go after? Their business is tied to the PC and networking side at the moment, which is X growth, and they're experiencing an increased level of competition. So are they going to double down on their AI investments or look to move to another sector? And finally, this is a very integrated business model, which is carrying a lot of cost. There's still potentially cost to come out and maybe more rounds of restructuring to come. So it's, ideally, who's going to take Gelsinger's place? It really needs to be somebody with a proven track record in turnaround, particularly in the semiconductor industry, ideally. So, yeah, it's a step in the right direction. Poor old Pat, he did his best, but I would say he's probably the chief architect of their more recent troubles. So we need a fresh pair, fresh pair of hands, fresh perspective, fresh strategy to try and turn this beast around.
OK, Robert Lee on the challenges facing Intel and the next and incoming leader after Pat Gelsinger was forced out. Rob Lee with the details and the analysis from Bloomberg Intelligence. Robert, thank you. Coming up, France's moment of truth with the government poised to collapse. We looked at the market reaction. That is next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The French Prime Minister warns of a moment of truth with his government on the verge of collapse. The euro and French bonds sell off. Fed Governor Chris Waller says he's leaning towards a US rate cut this month, with other officials making clear they expect more reductions next year. Plus, a court again rejects Elon Musk's bumper pay package as Tesla CEO. But over at SpaceX, a tender offer sees the startup's value rocket to about $350 billion. European futures pointing to modest gains around 0.3%. Of course, we keep an eye on the asset moves around the French political story. But currently, European futures looking to add around 0.3%. Here in the UK, FTSE 100 looking to add 11 points, 8,335. S&P futures after a 54th record yesterday, looking to some very modest upside to build on the gains of yesterday. Nasdaq 100 futures currently flat, looking to add just 11 points after jumping around 1%, a little over 1% was at the end of the close on the Nasdaq 100 yesterday. Let's flip the board and have a look. A little bit of celebration coming through for US Treasuries. Yields are up, price down on the benchmark 10-year, currently yielding you 4.20. Euro dollar in focus for us after that little over 1% drop that we saw in the single currency yesterday, largely linked to what's happening in France and the standoff there. 104 on euro dollar, just down 0.1%. Brent trading at $72 a barrel, up 0.4 for oil as we look ahead to the OPEC Plus meeting tomorrow. And gold up, currently 0.4%, closing in on 2,650 per troy ounce. Let's get some market reaction analysis then to what's happening in France. The spread between the 10-year French and German notes has widened further, with the French government poised very likely to collapse as early as this week, potentially by Wednesday. I'm joined now by Elsa Lignos, Global Head of FX Strategy at RBC Capital Markets. Elsa, thanks so much for joining us in the studio bright and early. How much is priced in to euro-dollar at this point on the politics of France?
Quite a bit is priced, and I think based on what we've seen the last few days, it does seem like we're heading for a vote of no confidence. Politically unprecedented in France, but actually having spoken to clients domestically in France last week, my colleague Peter Shafrick, who was there for a couple of days, reiterated that most expect the government to fall, but actually think it will almost be business as usual.
Oh, OK, we'll expand on that. Why business as usual? Because they have a mechanism to get a budget through anyway, although that's untested. Are you suggesting that actually markets, or at least euro-dollar sensitivity to this event, is going to be maybe less than some investors expected?
So euro-dollar sensitivity has been relatively high. The issue for euro is that you've got a lot of short positioning out there already, and you can see it in the fact that despite everything that's been going on, we're still only just below 105, which is more or less the level we've traded at for the last week. So when I look at the French situation at the moment, and not just France, but more generally the threats from Trump and tariffs and everything else, you really need material new news to get those big moves to the downside for euro-dollar.
Where would you talk about tariffs, and maybe that's the next big risk for euro as we look into next year? Where would a trade war with the US take the euro?
Well, it depends on the magnitude of the trade war. Full-blown trade war, people start talking about a move through parity. 95 was the level we got to in late 22. But remember, getting there in late 22 took a lot of things lining up together. It was a big bond equity sell-off that drove the dollar higher across the board. There was a full-blown energy crisis. It's clear that the hurdle for those big moves lower in euro-dollar is fairly high. Not to say that we can't get there, but I think it's going to be a hard-fought path lower, and that's why I think a lot of investors are reluctant to add to new shorts at these levels. OK, that's interesting. Nonetheless, do you see parity in Q1, first half of next year for euro-dollar? What is your central case in terms of the range for this pair next year? So I've penciled in 102 for the first and second quarter of next year. Absolutely could hit parity, but like I said, the hurdle for that is high. We need big new news. We've seen quite a bit from Trump already in terms of threats, the threats against the BRICS, against Mexico and Canada, but it remains to be seen how much he'll actually do in practice. I do think he'll do a lot more than he did last time round on China. I don't think he'll go that far on Mexico and Canada because of the economic pain it would inflict on the US itself, and Europe is probably stuck somewhere in the middle. Where do you see, let's move on to yen then, with that view then. So 102 potentially on the target for euro-dollar with some of those short positions built in. We had the Bank of Japan meeting on December the 18th. There seems to be a positioning from Governor Ueda to signal that at least there is a serious consideration now of another hike. Where do you see, given the work that's been done in the yen, what's your latest target around the Japanese currency? So what's really interesting in the yen is that I just got back from 2 weeks in North America, and across the board, everybody was long dollars, pretty much against the euro, against the Swiss franc, against the Canadian dollar. On the yen, people were a little bit more circumspect. I certainly found people out there who were long yen as well as those who were short yen as a carry trade. So at the moment, I think there is still some risk to the top side for dollar yen because of what's going on in the US. I mean, our call for the Fed has always been a higher terminal rate than the rest of the market. The market has readjusted towards that forecast. We've got 4 to 4.25 for our terminal rate in the US. And at some point, you may even start having people debate a potential hike after that. All of that is not great news for the yen. But at the same time, you do have the Bank of Japan slowly tightening rates. And at some point, it will become economic for Japanese investors to put hedges on. That's big dollar yen selling.
OK, you put the hike word in there when it comes to the Federal Reserve with a neutral rate of above 4%. Again, not consensus. What is it more about rates for the dollar or more about the fundamental strength of that economy? Essentially, do you continue to get dollar strength unless and until you see significant weakness for the US economy?
That's it, absolutely. I mean, for a long time, the story of US exceptionalism has dominated. And the times when the dollar has temporarily weakened, we saw that happening, for example, through August, September this year, or the same thing happened during the summer last year, has been very much linked to fears about a US slowdown, which just haven't materialized yet. I mean, the reality is the fundamentals of the US economy are just a lot firmer than I think anybody expected 2 years ago.
Before we let you go, the pound is up about 5% versus the euro year to date. Is the pound looking a little rich at this level?
So it has been justified by the fact that the Bank of England has been so reluctant to cut rates. We actually think the forward curve now is reasonably well priced. We've got a terminal rate for the UK of 3.75.
When do we get to 3.75?
Next year. So
next year, second half.
Bank of England cutting once every other meeting, skip in December, and then every NPR meeting in 25. But I think that's now pretty well priced. So yes, people have some short euro sterling on as a carry trade, but you need, again, new news in order to break it out of that range. OK, Elsa, Lignos, thank you very much indeed, with a view of around 120, 102, I should say, on euro dollar, and of course giving our views as well on the yen and the pound, maybe looking for new news to move things significantly when it comes to euro pound. Elsa Lignos, Global Head of FX Strategy at RBC Capital Markets. Thank you. Now, President-elect Donald Trump is set to travel to Paris on Saturday to attend the reopening of the Cathedral of Notre Dame, which was devastated, of course, by that fire in 2019. Emmanuel Macron will likely become the third foreign leader to meet with Donald Trump since his victory last month. Canadian PM Justin Trudeau and Argentina's Javier Milei have had meetings with the president-elect in Florida. Staying with President-elect Donald Trump has nominated investment banker and prominent Republican donor Warren Stevens to be the US ambassador to the UK. It comes as UK Prime Minister Keir Starmer said in a keynote speech on foreign affairs that Britain does not need to trade off its special relationship with the US against its European alliances.
The idea that we must choose between our allies, that somehow we're with either America or Europe, is plain wrong.
OK, joining me now for more is our UK correspondent Lizzie Burden, who's been charting all of this for us. Lizzie, what else are we learning about the special relationship between the UK and the US, given the political differences, of course, between Starmer and Trump, and where it leaves our relationship with the EU?
Yeah, I mean, you remember before Trump's victory, there was this tension between the two camps. But Starmer says it's now not about sentimentality, it's about realism. And as you heard there, it isn't a binary choice between the US and Europe. You mentioned Trump's choice of ambassador to London, Warren Stevens. He is a prominent Republican donor, an investment banker who's on the IPO for Walmart. So he fits the bill. This is usually a landing spot for the wealthy, high-profile individual who fancies the pomp and circumstance of London.
I mean, God forbid that you actually appoint an ambassador who has experience as an ambassador, but this is all about favours, isn't it, in the US?
You've been watching The Diplomat on Netflix.
Maybe
but
I
look,
should.
That's the personnel side. In terms of the policy, of course, the key area is going to be Ukraine. And yesterday I was speaking to the UK Defence Secretary, I should say, John Healey, about what happens if Trump pulls support for Kyiv. do you prioritise the special relationship in that situation? He said it's Ukraine that is in this war. It's Ukraine that's got to decide how or when they come to the talks, to the table. And until then, the UK will be steadfast in its support for Kyiv. And
you had this conversation with the Defence Secretary of the UK, and you talked about this new strategy that they are putting together, likely to come through, next year? What are the details? What's the significance? What did you hear?
Well, look, a big question is when they will announce the deadline to spend 2.5% of GDP on defence spending, because what's the point of a target if you don't have a deadline? He says we'll find out about that in spring, which is almost a year into Labour's term in office, so not quite the certainty that either Donald Trump or business wants. But on top of that, the point of this is to kind of divert defence spending into British firms like BAE Systems. So take a listen to what he said.
First, we will direct British defence investment more towards British-based businesses so we can drive jobs and growth throughout the UK. Second, we will make sure that we can innovate at a wartime pace, learning the lessons from Ukraine that tells us, look, the cycle of obsolescence can be as short as 6 weeks on the front line. And thirdly, and importantly, it's the foundation of long-term relationships, government and business working together, industry, investors, innovators. And today we're doing the first ever wargaming with industry that is looking at the challenges and decisions that we would face in government, industry would face as well if we had to deal with conflict and some of the threats that would come from that to industry and to their supply chains.
So innovating at a wartime pace, which is crucial because the likes of Israel do their military technical development on the battlefield. The idea of buying British means that the R&D money goes into British firms. But it sets up a week of major policy announcements here in the UK. Keir Starmer's going to give a major speech on Thursday. They won't use the word reset, but the idea is to kind of hit the reset button after what has been a turbulent few months. And it kind of comes back to the American experience. Labour has seen the Democrats lose the US election in their diagnosis because they failed to deliver. So now they're concentrating on changing, as they would put it, changing Britain's lives so that they feel there's been a difference made so that they can be re-elected in 5 years' time.
Really interesting that Labour are taking lessons from the thrashing that the Democrats, of course, faced on November the 5th. Lizzie Burden, thank you very much indeed, speaking to the Defence Secretary on that new strategy for the UK. Coming up, Germany's crisis of competitiveness. We're going to take a look at how the sluggish economy and political uncertainty is hitting SMEs in Germany. That's next. This is Bloomberg. Welcome back. Roughly 66,000 Volkswagen workers in Germany have participated in temporary walkouts over cost-cutting measures. The strike is indicative of the crisis of competitiveness facing the German economy, on top of an already uncertain political climate. According to the German Association of Small and Medium-Sized Enterprises, SMEs have borne the brunt of rising energy prices and high tax burdens in the past few years. For more on this, very pleased to say we can cross over to Bloomberg's Oliver Crook, who stands by in Berlin with an exclusive guest. Ollie.
Hey, Tom, thank you so much. Yes, Tom, I think we need to talk about this part of the German economy that's really crucial that we don't talk enough about. It's the SMEs, the Mittelstand. And just to give you to illustrate the size of this and its impact on the German economy, it is basically accounts for 99.6% of all companies in Germany. 51% of all jobs that contribute to the ample social safety net are employed in the Mittelstand. It accounts for 2.7 trillion euros worth of sales every single year. And of course, it is a very important pipeline for people to learn how to do their jobs. 75% of apprentices in Germany learn their trade in Mittelstand and medium-sized companies. The problem is it's very hard to get a gauge on how they all feel in challenging economic times. That is why we're very pleased to be joined now by Christoph Ahlhaus, who is the chairman of the lobby for the Mittelstand for the SMEs here in Germany. The last time we spoke, about a year ago, there was a survey out. It was a very grim appraisal of how SMEs were feeling in Germany. About a quarter of them were thinking about selling their businesses. About a fifth of them were thinking about moving abroad. What has the last year brought for these companies, for the Mittelstand?
Yes, to tell you the truth, it's getting worse, and I think behind us there was a chaotic and ultimately a lost year, and we had a coalition that paralyzed itself for more than 3 years. It was a nightmare for the German economy, particularly for small and medium-sized companies, which were already struggling with a recession.
And what was the sort of the greatest difficulties? What are the things that need to be addressed in principle by this new government? What do they need to hear from the Mittelstand?
Reducing taxes, tackling Germany's bureaucracy, addressing excessively high energy prices, finding new solutions for the labor shortages. So I think these are the biggest problems they have to deal with.
And do you have an idea from your members of who in the political spectrum is offering the best sort of plan to do that? Because certainly my impression, it seems that Germany is running a traditional economic election campaign in a time when something much more radical is required.
You're totally right. People, especially the entrepreneurs, feel that they have, with their politicians, they more or less they have a kindergarten with people who are struggling, and they only discuss strategy for their parties, but not a strategy for the country, and that's a big problem. And so they need more confidence in their country. They need more confidence. What is the right way now to bring this country to its old strength again?
And do you have a sense that many of these companies are prepared to do these things, to move in these directions, and have that sort of energy, but are being held back by basically how either regulation or how the government is taking shape right now?
I think so, yes. And, the small and medium-sized company enterprises long for clarity and for stability. And do you know what I have been hearing repeatedly over the past few weeks when speaking with all these SME owners? They say usually the government needs to finally ensure that we can do our work again. We want to perform, we want to succeed for Germany, but politics must stop holding us back and must bring us the self-confidence we need now that we can perform by ourselves, not for the government.
And how concerned are business owners about the Trump administration and the possible tariffs? Are they thinking about this? Is this something that they're sort of needing to look at where they export to?
You know, it's difficult and it's hard to say from Europe what the Americans have to do. It's not our job. I think Germany would do well to view and accept the democratic decision of American voters in a factual and unemotional manner. America is and will remain an important partner for Europe, the most important partner, and our country. That is why the German Mittelstand will continue to advocate for fair and friendly transatlantic cooperation. I think we have to discuss more and we have to speak more with each other and not about each other.
Yeah, and do you think that there needs to be a greater effort either by the government or by German companies to try to find new markets outside of Germany? Because obviously China has been a huge part of the German success story. The U.S. is now the biggest trading partner. Both of these markets are sort of at risk. Are you getting a sense that the Mittelstand is able to find new markets?
Yes, they do, and they are in the middle of this process. You know, all the supply chains are changing right now. They go a little bit back from China, and they will be organized in a new way. They come not back to Western Europe, maybe to Eastern Europe, to India, to South Korea, to Africa. There is a change right now. And this is also a chance for many German medium-sized companies to make a new feeling, which is the best country where in their branch they can be successful.
And I'd like to also get your view of basically what the Mittelstand's view is of the European Commission. We have a new commission coming in. They say they want the focus to be on making Europe more competitive. They say they want to cut regulation. What is the sort of view from...
You know, I hear these words, but, we have heard these words 5 years again with Mrs. von der Leyen as our commissioner, first commissioner, and it's very, very difficult to believe in these words because, also the last 4 years from the European Commission were lost years for the European economy. They made so many things which are which are very difficult for medium-sized companies in Europe, not only for Germany. It's Italy, it's Spain. Yeah. All these countries suffers from these bureaucracy which comes from Brussels. So also in Brussels, we need a strong cut and a new thinking, and a new self-confidence for European economy that they can decide what is going right.
And that's certainly something we've heard from a number of people in the private sector, and of course the farmers, which we saw on very grand display earlier in the year. Thank you so much, Christoph Ahlhaus. Tom, with that, I'll send it back to you. Just a sort of fairly, I have to say, grim appraisal of the Mittelstand, the SMEs, really the backbone of the German economy, a nightmare situation over the last year, and the politicians playing at kindergarten.
Yeah, some pretty punchy comments there from your guest. Oliver Krupp on the ground for us in Berlin with that interview. Ollie, thank you. There's plenty more coming up. We're going to set you up for some of the data on the jobs front crossing from the US through this week. Stay with us. This is Bloomberg. Welcome back. So as France's government apparently approaches its imminent demise, at least in its current form, potentially as soon as tomorrow, we, of course, continue to watch the spread of French 10-year OATs and the yield above their German counterparts. Currently at around 88 basis points. The trading will start, of course, in the next hour, and the opening trade will bring you that. But we look at the spread. You get back above 3% as well in terms of the benchmark 10-year in France. How much is priced in at this point, and how much further is there to go? Some of our guests have talked about 100 basis points. Some have talked about 120, 130 in terms of where that spread could get to and the pressure on the finances of France. And not many of our guests and investors have suggested that they're willing to dip their toes back in to the French sovereign market, given that yields are still pretty weak in terms of what you'd be getting on that investment. Take yourself back and time back to 2012. Of course, the Eurozone debt crisis, that's when you saw these levels. And so we're getting back to that kind of territory, and we continue to monitor that, of course, on the politics of France. Let's flip the board and have a look at what else is on the agenda. There's a big focus on the jobs data out of the US. You've got JOLTS today, you've got ADP tomorrow, then you've got non-farm payrolls, of course, on Friday to round things out. Will you see more cooling? You're expecting certainly to get a cleaner read on the labour market of the US for the month of November after the strikes, of course, and the weather conditions and hurricanes of October. In terms of the ratio of job openings to workers looking for work, that is expected to narrow and decrease back to well below pre-COVID times, suggesting that you are getting a more balanced labour market. That is a view from Bloomberg Economics. The JOLTS data out later today before ADPs and non-farm payrolls on Friday.